This comment right now from a Fed official, those headlines just crossing here on the Bloomberg terminal. In the meantime, you've got gold gaining today as the dollar continues to fall, boosting the metal's appeal as an alternative asset. Still a lot of debate around about whether gold can climb back toward the 26-year highs reached in May or continue to extend that 14% slide you've seen from those 26-year highs. Let's take a closer look in our weekly Commodities Corner segment, and for that, we're joined right now by Kevin Kerr. Kevin is editor of the Resource Trader Alert, also joined by our commodities reporter Sandra Smith. And Kevin, welcome.
Thank you.
You are, I think, an unqualified metals bull, we can say. So give us your take on gold, where you see it headed right now and why.
This has been a real volatile market. And like you said, we just had 14% pullback. Before that, we made 26-year highs. You know, this market has changed so much in the 20 years I've been trading. These are unprecedented times. We feel longer term we are bullish on gold for many reasons. We're bearish on the dollar and we're bullish on gold. For it to get back to that level, though, it's going to be a tough putt. It's going to take some time. We've seen some, extremely...
But why bullish?
Why bullish on gold long term? We're seeing worldwide demand. We've seen a lot of speculation pour in. We've got these ETFs that are going. Everything's in place for that. But we have seen a lot of the speculation, all that money pulled out recently, and those investors are spooked. We're going to need to see them come back in and be more confident about gold before it goes higher.
The flip side, and one of the arguments for people who say prices are headed lower still, is that European central banks, or just central banks in general, are going to do more unloading. What do you say to them?
Well, we also are seeing central banks buying gold around the world, and that's really what we are seeing that is going to drive the price higher, to answer your question from before. So we're confident that central banks are going to be buying more gold, selling more dollars, and that's really going to be the driver behind gold's price.
Kevin, I wanted to go to gold and silver, and usually there's a strong correlation between the two, although this week we see silver up over 4%, gold down on the week. Is there, are these two diverging? Are they coming
Well, I'd like
apart?
to say it's because we're buying it, but I don't think we're driving the price. No, I think there is a little bit of a divergence here. And longer-term silver is doing really well out further, 2007, 2008. So I think we're seeing more buying in that a little quicker than gold. I don't know what the reason is for that, but we are seeing that, yeah.
It does. It seems like it's sort of fighting off that liquidation for the flight to quality.
Exactly.
Harder than gold.
Absolutely.
Something you're seeing there.
What about volatility with silver? Do you think we're going to start seeing less, and particularly compared with the volatility we see in gold prices?
Well, less is all relative. To me, these markets are extremely volatile. I would say that we probably will see some smoothing. I think a lot of the early speculators that jumped in when the ETFs came out and started getting the futures have kind of learned their lesson and are going to be a little more cautious. We're going to see a little bit more price smoothing. But again, these markets are so volatile that it's all relative.
Well, I think we're going to jump into another commodity. We're talking about volatility in these commodities, and obviously, you write newsletters for these. We're going to take a look at sugar, and several trade houses are predicting the surplus of over 3 million tons for sugar. Obviously, a bearish indicator for that market. What do you have to say about that market right now? And is this as bearish as an indicator with the ethanol?
Yeah, this is the thing with sugar. It's been a very volatile market. It's done very well for us, and now it's pulled back quite a bit on these reports you're talking about. Of course, China came out and said they were going to auction 596,000 tons of sugar, and the market plummeted, and then they just have put that auction off now. But we're not seeing that buying coming back in. And a lot of what I'm hearing from the floor, and again, we would think it would be funds selling this. It's not. It's actually the producers selling against the funds that they know are long. And it's kind of a squeeze play. So that's what we're hearing in the front month sugar. So we've moved into March already for next year and even further out for the ethanol.
So you're saying
play.
The commercials are coming in, building up a net short position on this.
Exactly.
So how do you tell an individual investor to play in such a volatile market?
Not to play close in, have to play further out. Our basis for trading sugar or the other commodities that make ethanol, like corn, is for it to be longer term. It's not going to happen overnight. So the closest in we'd look is March of 07. And we're looking for a small movement. We're not looking for it to go back up to its highs. We're looking for it to move higher and then further out, for the longer term gain. We see sugar going to 23, 24 cents by the end of next year based on ethanol alone. Walmart has come out and said that they might start doing E85 ethanol at all of their stores. They may build gas stations at 3,000 stores, and that's 100, how many thousands of pumps is that? So we really are very bullish on ethanol.
So let's talk a little bit more about corn. We'd been tracking it, Sandra had been tracking it real closely last week, and people were kind of surprised by what the FDA report showed. But you have some contrarian views there. So what do you think the play is there right now?
Well, while the report was clearly bearish for corn, on the face of the report doesn't dig very deep. It covers a few states. There's been some very high temperatures in some of the key states, Minnesota, Illinois. It doesn't count kernels. There's very specific things that I'm not an expert in, but I know they need to be done. It's like when you go to the grocery store and you peel back back to stock to look and see if the corn is any good. This hasn't been done. This report didn't cover that in depth, and we won't know that till harvest time. So the report was a little sketchy.
Well, on that note, what could we look for in the harvest? What could come out of harvest that could really push these prices higher?
I think the kernel size, the kernel depth, they call it, the weight, just the look of the corn when we actually harvest, and of course ethanol demand. How much of these new ethanol plants, how much demand is being peeled away from feed corn and other things. So it's really going to depend on harvest time. So this is a really preliminary report. But the interesting thing was it moved so far on this report. It should have gone down, but 14 cents was just a ridiculous move. It's the biggest move in how many years? And it moved a great deal. So
and therefore the play is?
Well, the play is to buy back in at cheaper levels where we are now. I think, again, this is another market where you have to look further out. We do have some December options on, but I even like further out. So we've been buying 2008 December call spreads, which is the best way to play it, where you're buying one option or selling one option to pay for the buying of the option. It's longer term, it's a limited profit potential, but it's a really great play long term if ethanol is going to come to bear, which we think.
All right. You know what? We're gonna leave it there. I know Sandra has another question. I have more questions, but we're gonna run out of time. So
All
Kevin,
right.
thank you so much.
Thank you.
We hope you'll come back so we can ask you a lot more questions.
Thanks again.
Okay, Kevin Kerr of Resource Trader Almanac. With that, we are going to wrap it up because we do have to head into a quick break. When we come back, Parent American Silver has been riding the wave of higher metal prices. Investors have taken notice. So we're going to keep talking about commodities. The stock has produced monster returns over the past 4 years. We're going to find out if the CEO thinks the good times can last. Straight ahead.
Bloomberg's financial market update.